What can a person do? Because I'm backed up all the way with gold, silver. I have mining shares and all this. I have oil wells. I have beef. I have, I have things the Fed cannot print. That's my claim to fame. I have no stocks, no bonds, no mutual funds because I just don't like paper. But you're into all these different types of markets and all this. What do you recommend? What does the average person do? And my advice is don't be average. This is not a time to be average. So what do you recommend?
You want to be in a minority. This is the time you want to be in the minority. And I'm not talking about racism. I'm talking on the monetary side. And when we gave this advice that we're going to go into the opportunity of a lifetime, we said,
yes.
And it's not buying. It is, we said, go and sell short. You sell short stocks. You shall sell short just about anything you can think of that everybody has been piling into. Sell it short, and you will make money beyond your wildest dreams.
Right. But Bert, now you're getting my heart racing because that to me is terrifying. How do you? I've tried short and got my butt handed to me because it went the other way.
There's an easy way now. There's an easy way, Bob. They now have ETFs, and they do this short selling for you. They are designed to rise in price when the index or the sector declines.
Okay.
And that makes it so easy because most people cannot understand the idea of selling something that you don't own. Okay?
Yes.
And that's what short selling is.
Yes.
And so these ETFs, and they have them on the indexes like the S&P, the NASDAQ, etc. They have for countries, they have these inverse. They call them inverse ETFs. And that is the easy way. You just buy them and they go up, they soar in price as the market collapses.
The idea of selling something you don't own just terrifies, But,
you just said something very important. What everybody is into. Everybody's into options. This is incredible. And, when I started my business in 1977 in Honolulu, downtown, okay, we recommended options, okay, it was great. And then in 1980, we got a sell signal on gold, dropped through $694 and said, that's our bear market signal. Now you want to do exactly the opposite. Instead of buying call options, you buy put options. So at the end of 2 years, our put options were actually worth more in some cases than the mining stocks that were underlying those. Fabulous. But here again shows there's nothing forever. What goes up will also go down. Now, you talk about precious metals, and I get this question very often. What should we do? And it's always good to have some insurance position in gold and silver. I kind of prefer gold, but what I really prefer is the mining stocks. The mining stocks, they're not going to confiscate. With the way the government here is right now, it's also very similar in the 1930s, where the government confiscated gold, okay?
Right.
So we could see that again. But they're not going to confiscate gold mines, okay? One thing, you have to be very careful because the people on TV, they're going to start saying when the Federal Reserve pivots. Pivot is an outer word. In other words, when the Federal Reserve changes from quantitative tightening to quantitative easing again, someday in the future, okay? And then they say that's when you really want to buy gold. And in my opinion, well, not in my opinion, research shows that once the Federal Reserve starts easing money from a tight monetary price, that's when the biggest part of the stock market and the gold mining stocks appears. They tank when the Federal Reserve eases. And this is always the big trap. People think, the Federal Reserve is easing, now we got to buy. No, it isn't. If you look at the charts, this is when you have the last big strong drop in all of these assets.
What goes up also comes down. And I suspect we might be heading into a depression with inflation. Some people call it stagflation, but this one is so severe because we have a global liquidity crisis. There's no money. It's drying up fast. How to survive soaring inflation? So I'm going to talk to Bert about that, and we interviewed, Jim Rickards, Currency Wars, and he says the biggest problems in the shadow banking system we cannot see, the euro dollar, the euro yen, and all that. So inflation is up, gold prices are down, real estate's crashing. What else could we ask for?
You are right on. I agree with what you said about inflation, especially stagflation. And right now, you have to be so careful about who you listen to on the TV, because economists are equating now a slower economy with lower interest rates. If that were true, then Zimbabwe's economy would be booming, and Venezuela, people would not be eating out of garbage cans. This is not true. All these economists, they have the same problem. They believe the textbooks that they had in college. So, my degree is in chemistry, but I took 2 years of economics just to find out why economists are always so wrong. We said about a year and a half ago, we're going to go into a period of time that'll be terrible for people who are not informed.
Correct.
And I agree with your depression. I've been saying that. In fact, in early 2020, we wrote that we're going into a depression. If you want a roadmap, just read about the Great Depression of the 1930s. It's going to be very, very similar, except it will be worse.
Right.
Probably will be much worse.
And why it's worth is because what we did in 2008. When the derivative markets came apart, and they just printed more money, was put this thing in a bubble.
Yeah, but they have printed so much now, they can't print much more.
No.
And we saw a warning signal. Usually before these events, like Lehman Brothers and so on, you have several smaller events that don't get much attention. In fact, the default rate on subprime mortgages was soaring in 2007. And Bernanke said, that's an isolated situation, nothing to worry about, no recession in sight. And then, of course, we had the Lehman Brothers crisis in 2008, and everything fell apart.
And Bert, what about this year, the Bank of England having to pivot,
and the
pensions nearly collapse?
Exactly. I was just getting to that. That is the canary in the mine.
Yeah.
When suddenly the pension plans had to sell their leveraged treasury bonds, or gilts, as they're called in Britain. They were leveraged. People had no idea that pension plans can use leverage and derivatives. This is incredible. Nobody knew this. No. So suddenly they got margin calls. They had to sell their gilts to get money, and there were no buyers for the gilts. So the Bank of England had to come and buy the gilts from the pension plans. Otherwise, the pension plans would have gone bankrupt. And this was the canary in the mine. This is going to happen. We have $177 trillion of derivatives in the United States. That is an unbelievable amount. 177 trillion, not billion dollars. And you know that the four biggest banks in the United States hold 90% of those derivatives.
Correct.
Four banks.
And that other thing too is globally it's a quadrillion in derivatives.
Yes. Over quadrillion, 1.4, the best estimate. Yeah.
And what people may not realize, when you have a liquidity crisis, it's because they're finding out their so-called assets aren't assets. And that's why they have to sell their bonds.
Yeah, you wrote that in your first book, Rich Dad, Poor Dad. An asset can also be just a liability.
Correct.